So good day, I am April Rose Borden and I am here to give my answers for assignment 3, national income. So question number 1, define the following: GDP, GNP, exports, imports, net exports. GDP or gross domestic product is the total market value of goods and services produced by workers and capital within a nation's borders. GDP is the total monetary value of all finished goods and services produced within a country's borders in a specific period, usually a year or a quarter. It measures the economic output of a country. GNP or gross national product is the total value of all final goods and services produced within a nation in a particular year. GNP is the total monetary value of all finished goods and services produced by a country's residents, both domestically and abroad, in a specific time period. GNP takes into account the earnings of a country's residents from foreign investments minus the earnings of foreign residents within the country. Exports refer to goods and services produced within a country's border and sold to customers or entities in other countries. It represents the outflow of products to national markets. Imports refers to goods and services purchased from other countries and brought into the domestic market of a country. It represents the inflow of foreign products into the country. Net exports represents the difference between a country's exports and imports. It is calculated by subtracting the value of imports from the value of exports and is used to determine whether a country has a trade surplus or positive net exports or trade deficit or negative net exports. Question number 2. Differentiate GDP from GNP. Explain thoroughly the difference and give examples. So the key difference between GDP and GNP is the geographical scope they consider when measuring economic activity. GDP measures the total economic output within a country's borders regardless of who produces it. It includes both domestic and foreign resident production within the country. GNP measures the total economic output of a country's residents, whether they produce goods and services within the country or abroad. It includes the income earned by a country's resident from foreign sources and subtracts the income earned by foreign residents within the country. Example: let's say there are two countries, A and B. Country A's GDP would include the production of all goods and services within its borders, including those by foreign residents. Country A's GNP would include the production of its residents both domestically and abroad, but it would exclude the production of foreign residents within its borders. Conversely, Country B's GNP would include the production of its residents both domestically and abroad, but it would exclude the production of foreign residents within its borders. Question number 3. Differentiate exports from imports and net exports. Explain thoroughly the difference and give examples. So exports are goods and services produced within a country and sold to other countries. They represent the outflow of the products from the domestic market to international market. Imports are goods and services purchased from other countries and brought into the domestic market. They represent the inflow of foreign products into the country. Net exports are calculated by subtracting the value of imports from the value of exports. It represents the net result of a country's international trade, indicating whether a country has a trade surplus or positive net export or trade deficit or negative net export. Example: if country X exports $100 billion worth of goods and services to other countries and imports $80 billion worth of goods and services, its net exports would be $100 billion minus $80 billion equals to $20 billion, indicating a trade surplus. Question number 4. What are the methods in computing GDP? Write the formula for each method. Method of computing GDP and their formulas. There are 3 primary methods for calculating GDP. Expenditure approach is GDP equals consumption plus investment plus government spending plus net exports. Income approach, GDP equals compensation of employees plus gross operating surplus plus gross mixed income plus taxes on production and imports minus subsidies, or it can be GDP equals total income plus sales taxes plus depreciation. While for production approach, GDP equals value of output minus value of intermediate consumption. Question number 5. State example of each categories in the formulas in computing GDP approaches. Like for example, GDP expenditure approach equals consumption plus government spending plus investment plus net export, where government spending is for government expenditure with 3 subcategories on capital spending such as road construction, current spending example road repairs and maintenance. Number 3 is transfer payment. Example of categories or subcategories in GDP calculations. Expenditure approach. C for consumer spending. Categories include spending on goods like clothing, electronics, and services, examples healthcare and education. For investment, subcategories including spending on machinery, equipment, and construction. For government spending, subcategories include capital spending for infrastructure or projects, current spending for public employee salaries, and transfer payment for social welfare. Exports represents the value of all goods and services sold abroad, and imports represents the value of all goods and services purchased from abroad. For income approach, compensation of employees include wages, salaries, and benefits. Gross operating surplus represents the income earned by business owners and corporations. Gross mixed income represents income earned by self-employed individuals. Tax on productions and imports, taxes paid on production activities. Subsidies, government subsidies provided to businesses. For production approach, value of output is the total value of goods and services produced. Value of intermediate consumption, the cost of intermediate goods and services used in production. These methods and categories provide different perspectives on the economy's performance, and the 3 approaches should yield the same GDP figure when calculated accurately. So that's all for me for assignment number 3, national income. Thank you for listening.